Hi there, welcome to my channel where I dive into fascinating economic trends and analyze their impact on society. Today I shall be focusing on personal cross-border transactions. Specifically, I shall be talking about remittances. So what are remittances? Remittances are financial transactions where migrants send money from their country of residence and work back to their home country. In an article, What Are Remittances?, Dilip Ratha of the World Bank puts it this way, and I quote, "When migrants send home part of their earnings in the form of either cash or goods to support their families, these transfers are known as workers or migrant remittances. They have been growing rapidly in the past few years and now represent the largest source of foreign income for many developing economies." End quote. Before I continue, however, do visit our website where I curate news and publications from international financial organizations and world central banks. Please also subscribe to this channel and be informed whenever we publish a new video. Migrants leave their countries for many reasons, in many instances reluctantly. It is not the purpose or intention of this discussion to inquire into those motivations. My purpose is to discuss the role that they play by sending money back home once they have found an income-generating activity. There are migrants in all parts of the world. Some move to countries that are far away from their own home countries. Others move to the country next door, and yet others simply commute to border areas. Some migrants are long-term migrants, that is, they are away for longer than a year, most likely for many years. Others are away for periods less than a year at a time. In all these instances, these migrants remit a portion of their money to their families back in their home countries. In many instances, these remittances are a matter of sheer survival. In an IMF working paper, Podar and Mimam say this, and I quote, "Remittances matter for development. They are a key source of funding for developing countries. Migrants send part of their earnings to family members to provide them with basic subsistence, build and invest in the economy back home." According to World Bank data, remittances to low and middle income countries more than doubled during the past 15 years to reach $550 billion in 2021. Over half of it goes to people in rural areas, and about 75% is used to cover basics such as food and medical or school expenses, while the remaining is invested in assets or saved. End quote. Data indicate that remittances are not just critical for recipient family members, but are vital also for the recipient countries. The advent of the COVID-19 pandemic created concerns that remittances would be severely curtailed, negatively affecting not just individual households, but impacting recipient countries as well. In an IMF article in June 2020 titled "Lifelines in Danger," with a subheading, "The COVID-19 pandemic threatens to dry up a vital source of income for poor and fragile countries," Sayer and Chami said this, and I quote, "The COVID-19 pandemic is crippling the economies of rich and poor countries alike. Yet for many low-income and fragile states, the economic shock will be magnified by the loss of remittances, money sent home by migrant and guest workers employed in foreign countries. Remittance flows in low-income and fragile states represent a lifeline that supports households as well as provides much-needed tax revenue. As of 2018, remittance flows to these countries reached $350 billion, surpassing foreign direct investment, portfolio investment, and foreign aid as the single most important source of income from abroad. See Chart 1. A drop in remittance flows is likely to heighten economic, fiscal, and social pressures on governments of these countries, already struggling to cope even in normal times. End quote. This story, however, has a relatively happy sequel. In a press release a year later, the World Bank said this, and I quote, "Despite COVID-19, remittance flows remained resilient in 2020, registering a smaller decline than previously projected. Officially recorded remittance flows to low and middle income countries reached $540 billion in 2020, just 1.6% below the 2019 total of $548 billion, according to the latest Migration and Development Brief. The decline in recorded remittance flows in 2020 was smaller than the one during the 2009 global financial crisis, 4.8%. It was also far lower than the fall in foreign direct investment, FDI, flows to low and middle income countries, which, excluding flows to China, fell by over 30% in 2020. As a result, remittance flows to low and middle income countries surpassed the sum of FDI, $259 billion, and overseas development assistance, $179 billion in 2020. End quote. It is important to note that the figures just mentioned concern only officially recorded remittances. To the extent that many migrants may be undocumented in their host countries and therefore may be more likely to use informal channels to remit funds home, the official statistics do not capture these transactions. Not everyone views remittances in a positive light. Some researchers and commentators raise some negatives, notably that the departure of skilled workers from their home countries for greener pastures may result in a shortage of critical skills in the home countries, and that if remittances are large, there may be a disincentive for recipients to work. Because transaction costs tend to be very high, it has been speculated that the development of digital money may alleviate these costs and generally improve the flow of funds from senders to recipients. In a speech by Kristalina Georgieva, the IMF Managing Director, titled "Leveraging Digital Money to Facilitate Remittances," she said, and I quote, "Remittances have always played a key role in improving the lives of people in developing economies and supporting economic activity. And with the risk of a growing digital divide between rich and poor countries, we must also ensure that all countries can benefit from the latest innovations in digital money and payments, particularly remittances. Efforts are underway to improve cross-border payment systems under the Financial Stability Board's 2020 roadmap. New forms of digital money could provide a parallel boost to the vital lifelines that remittances provide to the poor and to developing economies. Within the right framework, peer-to-peer transfers of central bank digital currencies or privately issued stable coins could lead to shorter payment chains, faster transactions, and more competition among remittance providers. The biggest beneficiaries would be vulnerable people sending small value remittances." End quote. That's it for today's video. I hope you found this analysis insightful. If you did, please like this video and don't forget to subscribe to our channel for more engaging content like this. As always, I appreciate your support.